fake out. But yeah, we got a nice trade in the morning. You can see here this candle we entered. That was the 8 a.m. in the morning candle closing, and then at 9 opening we entered the trade. We put our stop loss below the 1 hour candle, and then that was the risk, 7 points, and we got 1 to 2. It was a good trade. Now this trade depends on what your risk factor would be. Let's say you're risking 7 points. If you risk $100 per point, it's 700, and you would make 1,400. So in my case, I will risk 500 per point, which is around 3,500 stop loss risk dollars, and then of course we can make 7,000 from this trade, which we did. It's just all about the risk, all about the opportunity, and this is the trade where it happened. Let me show you. So we got our flip in this candle. We cannot see the flip here, but I will show you where I got it. Here on Bitcoin, that was the confirmation that I got to say, all right, that's the flip. You see that? That was the flip. But here we couldn't see it. We didn't get the signal, but I got the signal on Bitcoin and on XRP. So which was telling me that's a flip. Even we have no signal on Ethereum. So let's break this down. Let's go here down. Let's go to the 5 minute here. So that was the candle. London opening happened here. This is the opening, right? And then we can see a big volume. And then you just need to know where is the candle. So that was the low from the 1 hour candle, the flip. Here we go. That's 41. That's the low. And the high of the candle, it's here. It was here exactly, right? So now we know what's the 1 hour flip. Why? Because it flipped the 7 a.m. Candle 1 hour, and then we got a flip. Then you go in and you can look for a position in this zone. Let me just show you better here so you will understand. So now what we can do, we can take our volume profile, we can do like this. Here we go, and we have our volume profile on the chart. Where is it? From the hour. Let's go to 7. I will show you the 7. So that's the hour. From 7 2 hours volume profile. And here was the flip that happened. Look at where the point of control is from the 2 hour candles. Here. Look where it came down. To 45. I went a little bit down, yes, to grab more liquidity, to fake traders into shorting. And then we saw a big push up. We could enter easy. You can already enter, for example, on the close. And where the close happened, it was here. You could enter here already. That would be the first entry. Or if you really want to wait for a pullback, like we got, stop loss is going here. I always put 1 point more, so it's 7 point stop loss, and we can target this high, for example, here, or you can just target 1 to 2 or 1 to 1, depends what you're looking for. You can see here that would be perfect 1 to 2 risk to reward ratio if we enter immediately at the candle 1 hour close. And then if we say, you know what, I want to my entry on the point of control from this move, the flip. Well, here is the entry. Put your stop loss just below the 1 hour candle. Yeah, exactly here. So that's a 5-point stop loss. So we gain 2 points here. And now you can target again this high here, just simply 1 to 2, and this is it. You will be finished very quick, very fast. How fast? Let me see. 1, 2, 3, 4, 5, 6. In 30 minutes, you would finish the trading session. You will do your profit, take your TP, will be hit very fast, and that's about it. And what we can see here is very important, the volume profile. If I take my anchor, you see that? Anchor at VWAP, and I will put it here. What do I see? I see that the volume VWAP anchor was exactly close to the point of control. So these are all entries that we can look for, and then if we get stop out, our stop loss is hit, then we don't trade it anymore. We tried, but that's trading. Nothing is for sure. Let me just go back down to the 2 minutes. Maybe you can see better here. That's the 2-minute chart. You see that? If somebody is watching on the 2-minute chart, or somebody is trading, and I know a lot of you guys are trading the 1 minute, which is wrong in my opinion, you would go short here. Yes, you would. Why? Because it's a big volume negative here. You can see here, and then yeah, okay, we are going down now. Short, short, short. No, all the liquidity from the past 2 hours is sitting here. It's sitting here, guys, right? And if you look here, look at this. We raid the liquidity. We took out the liquidity here. The Asia liquidity. We took out the Asia, which means we just have to go up. So that was here the case, and yeah, just to show you that some traders, even me at the beginning, I would take a short here. Mistake. Again, we took out the Asia low. That's the Asia low. We swept the low, big push up, and we have a lot of fair value gaps here. I can even show you the fair value gaps. Let me go back from here. That's 1 hour. Okay. I want you guys to learn something today. I will show you the fair value gaps on this move. I have it here. Look at this fair value gap. You see that? It came into our fair value gap. This candle. We had a big rate on liquidity, big push up, fair value gap. It came back once, and then just another time, twice, with a wick and up. There was no reason here to be short. This is what I'm trying to show you here.